We've been running Question of Money for 35 weeks now. This will be the last episode of season 1. We'll be starting a new season soon. When we started this series, we wanted young investors, the people who've just started working and have received their first paychecks, to learn all the basics about money. How should they approach investing, saving, borrowing and the rest? I was personally very keen to do this series because when I started earning at the age of 24 in 1995, I was a finance professional, but I knew next to nothing about investing or money. By chance, I got into a profession where tracking the stock markets, bonds, gold and all the asset classes was my mainstream profession. Over the next 28 years of my career, this is all I've done. I've tracked all these asset classes and written about them. Along the way, I found the process of tracking the market so fascinating that I got really interested in investing. In fact, I was a lot more interested in investing my salary than in spending the money. Something is always happening in the financial markets 24/7, and I really have enjoyed finding the various trends in different asset classes and telling people what is the best time to invest in stocks, bonds, gold or other asset classes. If you are investing systematically, it is not all that difficult to get wealthy. Even if you don't have any legacy from your parents and you come from a middle class background. You can't get Adani Ambani type of wealthy, but you can certainly make enough money through your investments to be able to fulfill your own goals, take good care of your parents, fund your children's education and have enough left over for a very comfortable retirement. I wanted to share all the mistakes that I made and the learnings that I had so that the young people of today can get to that 1 crore number on their net worth far more quickly than I could do. Right at the beginning, we decided to keep these videos very short so that we don't lose the attention of our viewers. We kept them to 5 minutes each. Our videos so far have received nearly 20,000 views with a lot of young people writing into us with their questions, comments and ideas. So for those of you who missed them, let me summarize our 4 most popular episodes. One of the very popular early episodes that we did was, can you invest with rupees 500? Now many people don't start investing at all because they simply think that they earn too little to do it. That's a real misconception. The most important variable in the compound interest formula that you learnt at school is N, the number of years, and not R, the rate of interest. Most people make this mistake and they keep waiting to get the best investment products to invest in. What we said in this episode was that the most important thing about getting to a really large kitty at the end of your career is to start very early and to be very consistent about your savings and investments. Mutual fund SIPs, bank deposits, post office schemes, NPS. There are a lot of such good investment products which let you get started at rupees 500 or rupees 1000 and you don't need any more money to actually invest in them. A really popular episode that we did was about how to avoid spending traps. Now I realize the younger generation today finds it very hard to save or invest because they have so many temptations. With online shopping, you can actually splurge a lot of money without any effort or pain and without actually moving out of your chair. So in this episode, we gave you various tips to avoid these spending traps that these various retailers and e-commerce sites set for you. You should set automatic debits for a recurring deposit or SIPs in your salary account in the early part of the month so that you save before you begin to spend. You should censor your social media feeds so that you don't follow too many influencers or others who urge you to splurge your money all the time. Instead of checking on your wardrobe, check on your investment statements quite often. Over time, you will discover that it makes you very happy to see how much you've invested and how much your net worth has grown. A third very popular episode was about sovereign gold bonds or SGBs. Now, with gold prices really shooting up, SGBs have given returns of over 15% per annum to investors in the last 7 or 8 years. So this led many people to ask us, is this the time to invest in SGBs? We started the episode by reiterating that it's never a good idea to chase investments that have done very well in the recent past. However, having said this, SGBs are one of the best ways to invest in gold. This is because SGBs track domestic gold prices very closely. Over time, you end up earning returns that are very close to gold price gains in the Indian market. This apart, the government also gives you a 2.5% interest on the SGB, which is not available on any other gold investment. Now, when you invest in gold in the form of jewelry, bullion, bars or coins, the problem is that it is not liquid. So, when you want to get out of this investment, you suffer a huge discount at the jewelers. Finally, one episode that a lot of people liked was me sharing my own investment mistakes as a newbie. So, I regretted not starting investing when I was in my early 20s. I also regretted pulling out my money out of my EPF and mutual funds when I didn't really need it just to book profits. So, I ended up interrupting compounding. A third mistake I made was being very impulsive and ad hoc with my investments in the initial stages of my career. So, I just ended up investing when I had the money and I wasn't systematic about it. But it's very important to actually be very systematic with your investments right from the beginning. We'll be back soon with the next season of Question of Money, where we'll handle more complex questions about money. Do keep sending us your feedback in the comments to our previous videos.